Welcome back to Bourbon Hunter, the channel where we chase great bottles, break down bourbon myths, and occasionally make some questionable life choices, all in the name of whiskey research. Here, we're diving into the stories behind the bottles, the trends shaking up the bourbon world, and the pours that'll make you say, yep, that's going on the top shelf. So grab a glass, settle in, and let's hunt some flavor, because around here, the bourbon's bold, the jokes are bad, and the hunt is always on. Bourbon is hitting the brakes, officially. Jim Beam is pausing production for all of 2026. Small distillers are filing for bankruptcy, and even Jack Daniels is cutting cost. What's really happening behind the barrels? In this episode, we break down the market reset shaking bourbon to its core, and why it matters to collectors, drinkers, and anyone who loves a good pour. For nearly 25 years, from about 1999 to 2024, bourbon lived in what can only be described as a fantasy economy, an industry-wide group chat where everyone agreed that demand would go up forever. Collectors would keep panic buying, and warehouses should be stacked to the ceiling like Costco before a snowstorm. And it worked. Prices rose, distilleries expanded, still capacity exploded, warehouses multiplied. And every master distiller said the same thing. Yeah, we're going to need way more barrels next year. And they were right, until they weren't. By late 2024 into 2025, the music slowed. Shelf dust returned. Allocations lingered longer than usual. RTDs, Gila, and I only drink on the weekends now became real competitors. Bourbon stopped being the only thing America wanted to put in its glass. What the industry is now experiencing is not a crash. It's far more dangerous. It's structural market reset. In plain terms, we made way too much whiskey based on vibes. The three proof points of bourbon market reset. This reset isn't just some Wall Street theory or cocktail party conjecture. It's showing up in real buildings, on real payrolls, and in real courtrooms. The bourbon industry is no longer just chasing hype. It's recalibrating under the weight of oversupply, declining demand, and rising cost. Here's how it's manifesting. Production slowdowns, aka stop the still, we're full. Who? Jim Beam, Suntory Global Spirits. Full distillation pause. Where? In Claremont, Kentucky, historic flagship plant. When? All of 2026. In December 2025, Jim Beam made the shocking announcement. It would halt bourbon distillation at Claremont for an entire calendar year. Their reasons? To align production with softer than expected market demand, and to invest in upgrades and maintenance rather than producing barrels that will sit unsold. Translation: our warehouses look like bourbon Costco, and nobody is panic buying toilet paper anymore. So, why does this matter? Bourbon is not beer. Every barrel filled today is a storage cost. Warehouses aren't free, and Kentucky's climate isn't cheap for long term aging. It's a tax burden. Federal taxes accrue even before the whiskey is sold. It's a financing liability. Distillers borrow against barrels, so unsold whiskey means tied up capital. It's a future pricing risk. Flood the market, and mature bourbon may sell for less than cost. Pausing production is a defensive strategy, not a sign of weakness. It's the bourbon equivalent of Detroit shutting down assembly lines during a car market slump. You're strategically throttling output to survive. You're acknowledging decades of growth are over. You're signaling that inventory discipline matters now more than the hype. Even more telling, Jim Beam is one of the largest bourbon operations in the world, producing millions of gallons annually. When they hit pause, it's a systematic market shift, not a temporary blip. And why should we care as bourbon hunters? This could mean fewer drops in 2026. They won't be because distilleries are hiding it won't be because distillers are hiding whiskey, but it's because there literally isn't enough being distilled to flood warehouses. The focus will shift from volume to quality and consistency, which could actually improve what ends up in your glass. Jim Beam's pause is a lesson in supply and demand economics, reminding even casual drinkers that bourbon is still a business, not just a hobby. Even before Jim Beam hit pause, smaller and mid sized distillers were feeling the squeeze. Cash flow is tight, aging barrels are expensive, and then golden years of endless growth are now over. So, some of the notable Chapter 11 filings for 2024 and 2025 craft and small producers include House Spirits Distillery in April 2025, Boston Harbor Distillery in March 2025, Devil's River Distillery in May 2025, Dented Brick Distillery mid 2025, the Alton Distillery in September 2025, A.M. Scott Distillery December 2025. Larger entities, Luca Mariano Distillery and LMD Holdings, November 2025. Kentucky Owl, bankruptcy began late 2024. It's still going on right now in 2025. Supply chain impact, Stagmeyer Stave, which is the bourbon barrel maker, ended up filing for Chapter 11 due to debt. So, why does all of this matter to us? Profit margins are compressing across the board. Inventory costs, storage, taxes, financing, they continue to accrue. Smaller producers are at most risk due to limited cash reserves. It's one thing to hunt bottles, it's another to watch the people who make them scramble in court because someone forgot to check the spreadsheet before buying all the barrels. Even legendary brands feel it. Brown-Forman, which is Jack Daniels, cut hundreds of jobs in 2024 and 2025, proving size and brand loyalty aren't immunity cards. When the majors start trimming, you know the party is over. With Jim Beam and their 1 year production suspension, Brown-Forman, which is Jack Daniels, with their hundreds of layoffs, and then temporary production pauses at other facilities. And it all matters because these companies have global operations, enormous spreadsheets, and consulting teams that dream in barrels. If they're cutting the market reality is undeniable. Even the guys who could sell a barrel to Mars are saying, slow down, we might have made too much whiskey. If the three proof points are the symptoms, these are the causes, the broader forces reshaping the industry. 1. Declining consumption and shifting taste. These are our US consumers and international buyers like Canada, Europe, and Asia. We started seeing this in 2024 to 2025, and mostly in the domestic market and key export destinations. After decades of near constant growth, US alcohol consumption is flattening. Whiskey, especially bourbon, is seeing its first sustained sales decline in decades. Factors include consumers gravitating to ready to drink cocktails, tequila, or lower alcohol beverages. Younger drinkers are seeking more hands on and immersive drinking experiences, mixology, or non bourbon premium spirits. Exports to Canada and other key markets falling due to tariffs and trade disruptions. Apparently, the Canadian maple syrup budget is eating into their bourbon budget. Who knew? Declining consumption has real consequences. Barrels that don't sell when they mature are financial time bombs. Number 2, oversupply and aging inventory. Kentucky distilleries and barrel warehouses are seeing this, and they're going to keep seeing it going into 2026. Bourbon hubs like Kentucky, Tennessee, and parts of Indiana. Kentucky's warehouses are stuffed. Barrel counts are at a historically high levels, far beyond what the market can absorb. Every barrel is taxed, insured, and financed. Storing excess barrels costs money in space, staffing, and handling. Aging inventory ties up capital that could be used elsewhere. Imagine your garage is full of boxes and your kid wants a new Xbox. That's bourbon right now. And nobody's moving barrels to the driveway. Oversupply also creates future pricing risk. Moving product too quickly could damage brand prestige and secondary markets. Number three, rising cost and margin compression. It's affecting all distillers, craft, midsize, and legacy. And it's going through the US and export markets. Costs are just rising across the board. Raw materials like the corn, rye, barrels, and labor are more expensive now. Storage and taxes pile up as barrels age. Consumers are diversifying into non bourbon spirits, squeezing margins further. We've already talked about legacy brands like Brown Forman that are scaling operations and cutting costs. Bourbon Hunter Reality Check. You can't just slap a fancy label on a barrel and hope people pay triple anymore. Margins are screaming louder than a line at a rare bottle release. So, our key takeaways tonight, the reset shows: one, consumer behavior is shifting, and oversupply meets softer demand. Two, inventory costs are crushing margins for distillers of all sizes. Three, even the biggest legacy brands aren't immune. Layoffs, paused distillation, and Chapter 11 filings show no one is safe. Four, scarcity may be coming real. It's not just hype. We might see it in 2026. For Bourbon Hunter fans, this is both a cautionary tale and an opportunity. Fewer drops might mean better quality, less hype-driven chaos. Smart collectors will see real availability align with real demand. In short, the bourbon market is resetting from a fantasy economy to a reality-based business, and the winners will be the brands that master inventory, pricing, and cash flow. The bourbon market isn't crashing, it's recalibrating. Production pauses, bankruptcies, and cost cutting aren't failures. They're the industry learning how to survive in a post boom world. The brands that thrive will be the ones that balance barrels, manage cash, and think long term. For drinkers, this could be good news: more intentional releases, better quality, and a chance to actually find the bottles you want without all the chaos. The bottom line: enjoy your whiskey, understand the story behind the barrels, and remember, bourbon isn't just a drink, it's a business. And right now, that business is resetting itself, one barrel at a time.
And that's another pour down. If you enjoyed hanging out in the hunt today, don't leave me standing here like an empty bottle on a Sunday morning. Smash that like button, hit subscribe, and drop a comment about what I should track down next. Remember, bourbon may age gracefully, but my YouTube channel only grows if you feed it. I'll see you in the next hunt. Cheers, bourbon hunters.